Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 2nd, 2025, and we're taking a deep dive into the US dollar/Japanese yen pair, or USDJPY. We'll be looking at the latest news shaping the macroeconomic landscape and then jumping straight into the charts to see how it all translates into price action. First, let's discuss the fundamental picture, which is absolutely critical for this pair right now. The primary driver is the stark monetary policy divergence between the U.S. Federal Reserve and the Bank of Japan. On one hand, the Fed, led by Chair Jerome Powell, has been signaling a hawkish stance, pushing back on the idea of guaranteed rate cuts. This has kept the U.S. dollar strong, providing a powerful tailwind for the USD-JPY pair. On the other hand, the Bank of Japan is widely expected to maintain its dovish policy, despite rising inflation in Tokyo. Much of this sentiment is tied to expectations of aggressive fiscal stimulus from Japan's government, which would likely delay any potential rate hikes from the BOJ. This fundamental conflict, a strong dollar and a weak yen, has created a very clear and established uptrend for USD-JPY, with many analysts calling for a buy-the-dip strategy. Now, let's see how this narrative plays out on the daily chart. As you can see, we've been in a significant uptrend for most of 2025, recovering strongly from the lows we saw around the 140 level earlier in the year. The price has been making a series of higher highs and higher lows, a classic sign of a bullish market. A very important technical event occurred just last week, which aligns perfectly with the news. The market broke decisively above the 153.28 resistance level, a move that was fueled by dovish commentary from the Bank of Japan. This level, which was once a ceiling for the price, is now expected to act as a major support floor. Following that breakout, the price rallied to a recent high of 154.445 on October 30th. The last couple of days show a slight pullback, which is normal consolidation after such a strong upward move. Let's switch over to the 1-hour chart to get a closer look at this recent price action. Here, we can see the anatomy of that powerful rally on October 29th and 30th, where the price surged from below 152 to over 154 in just 2 days. The pullback that followed on the 31st found some initial buying interest around the 153.65 area. For short-term traders, this chart highlights the key intraday levels. The recent high around 154.45 is the immediate resistance that bulls need to overcome to signal a continuation of the uptrend. On the downside, we can see minor support zones forming around 153.65 and then more significantly back towards that key breakout area of 153.28. For those trading on even shorter timeframes, let's briefly look at the 15-minute chart for the last couple of sessions. You can see the volatility here, with the sharp drop on October 31st followed by a period of consolidation. The price action is currently contained within a range. Scalpers and day traders will be watching this range closely. A break above the recent highs here could suggest a retest of the 154.45 level, while a break below the range lows could signal a deeper pullback towards the 153.28 support zone. Alright, let's pull back to the daily chart to summarize our findings and discuss what to look for moving forward. The overall picture remains bullish, driven by strong fundamentals and confirmed by a clear technical breakout. Let's recap the most important price levels to keep on your radar. The critical support level is now 153.28. As long as the price remains above this, the immediate bullish structure is intact. Below that, we have further support at the 153.00 psychological level, and then around 152.15. To the upside, immediate resistance is at the recent high of 154.45. If buyers can push through that, the next targets are 154.80 and the major psychological level of 155.00. So, what are the potential scenarios? The bullish case, which I believe has about a 70% probability, involves the price either consolidating here or dipping slightly before breaking above 154.45. This would be reinforced by continued hawkish commentary from the Fed and strong U.S. economic data, like the upcoming ISM reports. The bearish case, with a lower 30% probability, would require a significant catalyst to reverse this strong momentum. This could be a surprise rate hike from the Bank of Japan, although unlikely, or a string of very poor U.S. economic data. A break below the critical 153.28 support would be the first major warning sign for bulls and could trigger a slide back towards the 152 zone. The key events to watch for this week are the FOMC and BOJ policy decisions, so expect potential volatility around those announcements. Thank you for joining us on Explain the Charts. Before we go, please remember that this video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own research and analysis before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and we'll see you in the next video.